And that steroid rally has surely done wonders for the valuation of our stock markets. Well, less than 6 months after we lost the spot in top 5 stock markets across the globe, India has reclaimed that spot. Today, we pipped France to make that much needed comeback in the fabulous 5. With a valuation of $3.31 trillion, we now only lag behind the United States, China, Japan, and Hong Kong. And now we know that it's been a marvelous May for our markets, and hopefully it'll only get better from here. So to discuss the potential factors, headwinds, and what it really means for us investors, we're now joined by Aditya Shah from GST Investments, joining in right now to decode this runway rally. Aditya, thank you very much for joining us here on ET Now.
Thanks a lot for having me here.
So Aditya, what a stellar comeback of the Indian markets. You know, there's no really stopping the Indian markets, no holds bar, and it's really sort of shooting up. In fact, Chris Wood this morning in an exclusive interview to ET Now stated that the Sensex can definitely surpass the 1 lakh mark in the next 5 years. And India, as you would know, has been hailed as a bright spot by multiple times by multiple organizations. So where do you see this India story headed from here, and what are really the opportunities for investors to invest?
I'm reminded of the late Rakesh Jhunjhunwala's quote that India's stock market has started its journey from Mumbai to Delhi, and we've just reached Borivali. The market is just getting started. This decade will definitely belong to India. We've seen that 2000 to 2015, up till 15, 16, the 15 years belonged to China, and now it will belong to India. Manufacturing in India is coming and setting up in a very big way as it has never seen in the last 10 to 15 years. Apple is going to manufacture about $1 billion of iPhone by 2025. One of the biggest things that is really happening, government is pushing on the infrastructure side of it, where Vande Bharat, for example, the Vande Bharat train sets are being rolled out, and we have very aggressive targets. Metros are being made, airports are being made, and a complete makeover of the Indian economy is really happening. So I have said multiple times on your channel and on various forums that India ka time aa chuka hai, and we are very bullish. These smaller ups and downs, like the market had seen from 18,000 to about 17,600, they are part and parcel of life. However, in the longer scheme of things, we will not only see the Sensex at about 1 lakh, we will one of these days, at least in my lifetime and in your lifetime, we will see the Sensex at 2 lakhs, 2 lakh points. However, the broader point is the Indian economy is here to stay, and the next 10 years belong to India.
So that's the perfect headline moment when you say that during our lifetimes, it will certainly breach the 1 lakh mark. As Chris Wood this morning to ET Now's managing editor, Nikunj Dalmia, he stated that to him. Now, you know, my colleague Anisha was also taking us through the trade highlights of the day, and metals, Nifty Bank, auto, realty did well. In fact, Chris Wood also mentioned that realty is going to do very well. Banking is another space. In fact, the other investors who we've spoken to seem bullish on auto, considering India is a huge auto market, real estate, FMCG as well. According to you, what else, which other sectors will sort of drive this rally?
You know, it's very simple. India is an economy which is deficient in all of its major consumption sectors. FMCG, auto, banks, specialty chemicals, pharmas, all these domestic facing economy stocks will continue to do exceptionally well as consumption of India in every aspect continues to keep rising. So in my opinion, good companies across all of these sectors will do exceptionally well. You have to find out and pinpoint those companies. It will be a company specific rally. Of course, the index will also rise. However, individual companies are capable of giving much higher returns. In all of these sectors, you've just got to figure out good companies. In the real estate sector, in the pharma sector, in the specialty chemical sector, banking sector, FMCG sector, even in the auto sector, as the EV transition comes about, you will find a lot of smaller companies take advantage of this EV transition and do really well. So in my opinion, domestic facing economy stocks should be a broader theme. And as you said, Chris would also put out all the domestic facing economy stocks to do really well.
Right. So you're betting big on domestic facing economy stocks, and if I were to sort of expand this a bit further, how do you invest at current levels, and do you think this rally sort of can be sustained in the near term?
I think, yeah, I think that the rally is just started. For anybody who's got a longer time horizon, I don't know what will happen in the short term. Nobody actually ever knows what happens in the short term. However, if you have a longer term time horizon of about 5 to 10 years, I will say that the rally is just getting started. We're just getting warmed up, and you have to strap your seat belts in with the stock market, with your favorite stocks or the index or however you invest. So, in my opinion, let's not worry about what will happen today or tomorrow. Let's worry about what will happen 5 to 7 years down the line. And in my opinion, the rally is getting started. I was not negative on the market at 18,000. I'm not negative on the market when we touched about 17,000 or 17,200, because I am seeing the underlying changes in the Indian economy. Uh, it's fantastic. Apple never opened up a manufacturing hub in India, and now they're talking about $1 trillion of exports of iPhone. As you already said in your headlines, also that Tesla wants a piece of the lithium-ion reserves. No company was talking about India in the last 15 years. Now everybody wants to come into India. So India will become a very it is already a very hot destination for FIIs and for investments from private companies. So therefore, I don't see any problem with the index or with the stock market right now. I am very, very bullish. Having said that, we can correct, but every correction is a buying opportunity.
Right, Aditya. So you are saying you're extremely bullish and you don't see any headwinds, coming in as far as the India market is concerned. And very rightly you said about the lithium reserve. That again presents a huge opportunity, not just for the EV market, but, for other sectors as well that are into this space, into lithium-ion batteries. You also spoke about the manufacturing muscle that India is really, really building on. The government is helping all the companies help build that manufacturing muscle as well. But let me also ask you about the question regarding the China factor. Is India also benefiting from a stuttering economic recovery in China? How do you see that?
One is a very important factor. You see in specialty chemicals, you see in the manufacturing sector as a whole. Apple wants to diversify its manufacturing base away from China. So China will definitely be there, but India will also come up as a second most preferred manufacturing hub for all of these companies. Point number one. Point number two is uh, we uh, we are an alternative in the sense that a lot of problems that China faced during the COVID times and complete lockdown of China only made people realize that they cannot solely be dependent on China. The third point is India's population is very, very young. We have a median age of about 27 to 28 years, and as this population continues to grow older and older, they will only add big time to the economy in terms of consumption and also in terms of spending and also in terms of creation of a lot of other activities in the economy. So all in all, net, I think that Chinese growth will continue to keep slowing down, whereas India's growth will continue to keep moving up. And at a point in time, we will be the fastest growing economy in the next 10 years. However, after that, we will start to slow down. But right now, at this stage, there is a lot for India to do. We are nowhere in terms of infrastructure. We are nowhere in terms of auto consumption. We're nowhere in terms of many other things. So, all in all, China will be there, but India has a lot of catching up to do, and that will happen in this decade.
Right, on that bullish note, thank you very much for joining us here on ET Now, Aditya. Appreciate your time here. And you're being very, very bullish on the India story, on domestic consumption as far as that is concerned, on realty, on auto, and so many other sectors which are really, really based on domestic demand. On that note, thank you very much, Aditya, for joining us here on ET Now on